Hey y'all, today's video is all about dividend investing. In this video, I'm going to explain exactly what that means and show you how I'm using it to supplement my income in my move to Asia. Let's jump right into it. So first of all, let's start with a couple definitions. What are dividends? Dividends are simply discretionary distributions of corporate profit given to shareholders. They can occur periodically, ad hoc, annually, quarterly, or even monthly in some cases. It's all up to the board of directors. The next important definition is dividend yield. Dividend yield is a simple mathematical calculation. You take the total dividends distributed in a year, or the total dividends you earn in a year, and divide that by the share price. That gives you dividend yield. So, for example, if you earn $10 in dividends from a stock over a year, and that stock is trading at $100 a share, your dividend yield is 10%. Likewise, if you earn $6 over a year and the stock is trading at $50 a share, your dividend yield is 12%. Now, there are two important takeaways from both of those definitions. In the first one, the definition of dividends, the important part is that it's discretionary. That means that the dividends could go up, they could go down, or the board could decide to eliminate them altogether. In the second part, the important part is understanding the math. If the share price declines, the dividend yield will increase. So something you have to watch out for is understanding why the share price is dropping. Is it something temporary? Is it something more long-term that could be an indicator of a problem with the stock that might want to make you start looking for something different? So what's the objective of dividend investing? In this video, I said the one thing that cannot happen is I cannot run out of money. Let's look at a hypothetical real quick. Imagine you have $100,000 in savings and you're ready to retire. Now, you're going to retire to Asia and you're going to be on a retirement visa. That means you can't work while you're there. You're also too young to draw from your 401k or receive Social Security income. So you've got to live off of those savings or generate passive income to supplement those savings. Now with that $100,000, you've got a $1,000 a month budget. In this scenario, that means you have 100 months of living expenses saved up, or 8.3 years. Nice. 8.3 years of living in your savings account. That's great if you're within 8.3 years of being able to withdraw from your 401k or start receiving your Social Security or other pension. If maybe you're only 40, you've got a problem. That's where dividend investing comes in. In this video, we looked at using CD ladders to generate income. And in this video, we looked at high yield savings accounts. Now we're going to team those up with dividend investing to improve our income stream all passively. We don't have to do anything to continue generating the income. That doesn't mean it's fire and forget forever. You still need to keep up with your stocks and your CDs and your savings accounts to make sure that you're optimizing your income flow. Enough of the hypotheticals though. Let's jump into the computer and I'll show you some of the stocks that I have in my portfolio, talk about why I picked them, and I'll even talk about a few more that I'm considering.
All right, the first one we want to take a look at is not actually a stock, it's an exchange traded fund. So it's like a mutual fund. It's a company that invests in other companies, but it trades on the stock market. Its ticker symbol is SPYI. We'll call it SPYI. You can see that it's trading for $50.35 a share, pays a dividend of $4.77, and that gives us a yield of 9.47%. You can see its 52-week range, so in the last year the stock or the shares have been as low as $44.61 and as high as $50.58. So it's trading near its annual high. Let's dive into a little deeper look at the dividends. Again, 9.47%. Remember that yield changes with the share price, so it's constantly changing. The dividend over the last 12 months, $4.77. You can see that this ETF pays dividends monthly. So it paid out in June, May, April, March. There's the history of the dividends. You can also see that there's not a whole lot of history here. So this ETF is actually pretty new. Just something to keep an eye on. So there's no dividend growth rate yet. 49.66, or let's just say 50 cents per share per month is the dividend for this one. Another one I'm looking at, Pioneer Natural Resources, or PXD. Now this is a gas exploration company. You can see that it pays a dividend of $23.20 over the last 12 months for a yield of 10.77%. Share prices are high, $215.19, but $23.20 per share is a really nice dividend. Let's look at something a little bit more popular or common, or more of a blue chip stock. So Verizon Communications here in the US is a large telecommunications company, internet telephone supplier, very well known. $33.88 a share, has a dividend of $2.61 for a current yield of 7.7%. You can see there's a price target of 44 by some analysts out here. The range over the last 52 weeks, $31 to 46.5, so it's trading on the low end of that. So in addition to a really nice dividend rate, there's some capital appreciation or some share growth that we might see here as it moves back toward its high. Another one that's very well known is Altria Group. The ticker symbol is MO because it used to be Philip Morris. When that company spun them off, held on to the ticker symbol, changed the name. Pays a dividend of $3.76 per share for 8.25% as the current yield. Now, Philip Morris has been around a long time. Good old MO. Pays out quarterly, 8.25%, $3.76 a share. And you can see right now it's 94 cents a share every quarter. And you can see that every year for quite some time, that dividend has been increasing. So excellent dividend history, great dividend growth rate, solid stock with a very nice yield.
So looking at PXD and SPY-I, great income producing stocks, but you may wonder why I wouldn't just put all of the money in SPY-I. It generates more money, it pays monthly, and the simple answer is diversification, right? You don't want all of your eggs in one basket. If something happened to that particular fund, I could be in trouble. So we spread it out over a few different stocks. Now I'm a very visual person, so I've created a little dividend calendar for myself that allows me to see when my dividends are going to be paid. I've just added in a spreadsheet every stock that pays me dividends, how much I'm going to earn, and I've plotted it out so I know how much is coming in every month. Now this also helps me see where I might have low months. So in my considerations, if I'm going to add a new stock or replace one, I might consider adding in a particular quarter where it's low just to help keep things balanced out. If I'm looking between two stocks and one fits my calendar better and they're both relatively even in comparison, I'll pick the one that fits the calendar. So for now, while I'm still working, before I've retired, I don't need to receive the dividends as income. I've set up dividend reinvestment plans for each one of these companies. And what that means is that when a dividend is paid, instead of receiving it as cash, it automatically buys more stock in that same company. Now this has the benefit of dollar cost averaging as well. And dollar cost averaging is just buying some at different time periods to average out the price of the stock that you're paying. So as these dividends are reinvested, the next time dividends are paid, I actually receive a higher dividend payout because I own more shares, so I'm receiving more dividends. Compounding interest, but with stocks. Once I get to the point where I actually need that income coming in, I'll just simply turn off the dividend reinvestment and I'll start taking those as cash distributions. And I've got that money to cover expenses. So those dividend payments, combined with my interest income from the CD ladders and the money markets and other passive income stream, are actually going to account for a huge chunk of my monthly living expenses and cover most of my budget, and hopefully all of my budget. Through the dividend reinvesting, by the time I actually need to start drawing on it and taking those distributions in cash, I'm going to be in a pretty good spot. Now, if I run into an instance where I've got an unexpected large expense, I can always pull from cash savings. I can always let those CDs mature and withdraw that cash, or I can even sell stock if I need to. By using all three of these tools together, I'm making sure that I've got a good, steady passive income stream that's going to put me in a great position for my retirement. In a few months, I'll come back with a follow-up video and I'll show you how much I've made from the dividends combined with my interest income from the CD ladders and the money markets, and I'll show you how all this is working out for me. Hey, if you found this video interesting, I'd really appreciate it if you'd hit subscribe so that you can follow along with this journey. Remember, this is not financial advice. I'm not a financial advisor. These are just my opinions and my experiences. This is what I'm doing in my own personal life. If you're not quite sure about investing, make sure you consult with someone who's trained to give you guidance. See you next time.